We have our international keynote, Wayne Thomas, who is, as you can see, Managing Partner Financial Advisory Middle East at Deloitte. I want to say a very special thanks to Wayne and to Deloitte for stepping in to do this with almost no notice. Our other keynote speaker from Turkey, unfortunately, I was about to say was detained, but that has the wrong meaning. Couldn't make it, and Wayne very kindly agreed only on Friday to step up and do this. That said, I'm sure that the presentation will be to his and Deloitte's usual high standard. I commend it to you, and I now hand the stage to our international guest, Wayne Thomas. Wayne, please.
Thank you very much for the introduction, Richard. Certainly very excited to be here today at this event, which clearly is very important for the housing market here in Saudi Arabia. Saudi Arabia is a very key market for us at Deloitte. It's one of our global priority markets, and in fact our global leadership, including our global CEO, was here in Riyadh only last week with other members having some important meetings, as well as announcing some major investment for us as a firm here in the Saudi market. So again, very good for us to be associated with the event today, and through our work with both the Ministry of Housing and REDF, we're very thankful to have the opportunity. I'm just going to spend about 10 minutes only actually just talking through things and giving perhaps a bit of an international lens to some of the discussions this morning, and perhaps expanding a little bit on some of the areas that Khalid spoke about in terms of the international institutions who are doing similar sorts of things to REDF. I'm really going to look at that with the focus on the initiatives that are available to those institutions with the primary aim of increasing the affordable housing for those low and middle income brackets. I'm then going to look at some of the perhaps comparator set of international institutions about what they're doing in their local markets and what's working for them. So just to start off then, just looking at, categorizing the initiatives that have been spoken about this morning into, the four buckets that you see on the screen there around really assisting home buyers, assisting directly or indirectly lenders, creating or enhancing the secondary mortgage market. And I guess those three I would call the demand side stimulants, or perhaps demand side enablers, really all focused at getting finance into the hands of perhaps those borrowers who may be otherwise uncreditworthy, and trying to stimulate demand in those ways. And then lastly, on the investor side, really that's about trying to increase the supply of housing into the market. So just looking firstly, with home buyers, the initiatives available here are principally around the provision of mortgages by institutions to those buyers, either partially or the full mortgage, or interest rate subsidies is what we see, again, either on part of that mortgage or all of that. At the lender level, this tends to be, like I said, improving the creditworthiness of the population of buyers, and that could either be directly via provision of guarantees or mortgage guarantees or mortgage insurance, or perhaps indirectly benefiting those buyers through the lenders knowing that they have interest rate subsidies and those sorts of things. In certain markets, we also see very direct participation by institutions by providing refinance facilities to lenders. We also see co-participation, whereby the development institutions may co-participate in the provision of mortgages to those buyers. With respect to the expanding the secondary market for mortgages, the institutions have a role to play in a number of areas here. That could be through securitizing their own portfolios where they're providers of mortgages. It could be through the purchase of mortgage-backed security portfolios that have been made available by other providers, or it could be, again, through the provision of guarantees on those mortgage-backed securities. These really all enable those lenders to recycle that capital, increasing liquidity in the market, hopefully for the lenders and the borrowers, as well as providing income streams for the real estate institutions themselves. On the supply side, what we see here really, could be direct investments by institutions into housing projects, having a positive impact on supply, again providing the institutions with the opportunities to earn profits and create revenue streams from doing that. They may also provide interest-bearing loans to property developers, assisting development of schemes and again providing a revenue stream. In some markets we see them also taking a very direct role, being the actual developer themselves through planning, building, managing and maintaining those housing portfolios. So that's really giving you an overview of how we see the different buckets and the different initiatives that are available. And I think what's important to note there is really, when looking at this, to try and provide, a range of initiatives that do touch on the different aspects of the market there. Turning to some specifics, and like I said, Hala, touched on some of this earlier, and we'll just talk about a few different things there. We did research a number of global institutions around the world, covering the major markets in North and South America, Europe and Asia. There were probably over 20 or so that we looked at, but I've just summarized 5 here that, as you can see, provide a range of initiatives across those 4 buckets that I mentioned earlier. Just touching on each of them then. The Federal Housing Authority in the United States, that's primarily a provider of mortgage insurance and guarantees of loans. They also do provide interest-bearing loans. The National Housing Commission, or CONAVI, in Mexico, it's a relative newcomer compared to the others there. It was only established in 2001. The majority of the others there have been around for a number of decades. Its role is to promote, coordinate and implement the policy and national housing program of the government of Mexico, and it leads on housing policy development and coordinates amongst different real estate organizations for the housing promotions. In Hong Kong, the Hong Kong Housing Association, that's an actual developer and builder of housing projects, either for sale or rent. It encourages home ownership through the development of apartments and selling them at subsidized rates, and it also supports other housing institutions through equity participation in their schemes. Kagamas in Malaysia, as you can see, it operates more at the lender and issuer level than some of the others, providing support to lenders through provision of guarantees, in a revenue stream from them there, as well as developing the secondary mortgage market through securitization of their portfolio and sukuk and bond issuance. Lastly then, the National Housing Bank in India, as you can see, perhaps the broadest range of initiatives that we see there. They operate across all stages, providing finance to primary lenders, interest subsidies. They also have a mandate to trade in mortgage-backed securities and have direct involvement in housing projects as well. They've also been quite innovative. They provide reverse mortgage loans for senior citizens. So I think you can see there are a wide range of initiatives that are available to institutions across the globe, and I guess one of the key messages here is there is no one size fits all, and I think you do need to look at what works in your local market, understand the particular challenges of the housing market to develop a system and those initiatives that are going to work best for you. I think the other common theme here is that certainly those that have reduced the element of government support do have systems where they are generating revenue streams from the activities that they're doing. That is another common theme that we see. In terms of then just looking more specifically at, the impact that some of these institutions have actually had in their local markets, and I'll just pick up on a couple of these here. The Federal Housing Authority provides support to a significant number of families in the US. As you can see, there's some, nearly 48 million insurance, loans that have been insured, as well as providing over 8 million loans with over $1 trillion worth of outstanding capital. You know, these are clearly staggering numbers and just shows the impact that the organization can have. In Hong Kong, the Hong Kong Housing Authority provides rental housing to nearly a third of the entire population of Hong Kong. Again, you know, evidence of the significant impact that it can have. Kagamas, it's the largest issuer of debt in Malaysia, having issued over some $73 billion of sukuks and bonds over the last 30 years, and it's recognized by the World Bank as one of the most successful mortgage security facility providers there. So again, you know, evidence of the main impact, or the major impact that they can have, not only in the housing market, but in the broader capital and equity markets as well. So I think these examples show the significant role that the institutions can play in the development of the housing markets. So what can we take from all this? I think we can see that each organization has had a significant impact in their markets over their lifetime. And I think just in terms of some key thoughts, they've improved access to financing for a sizable percentage of the unbanked market, and most likely some of the non-creditworthy population, providing housing finance to millions of houses. They've experimented with additional revenue streams, ensuring or guaranteeing mortgages and direct investments in real estate projects. They've all experimented with innovative mechanisms, such as providing rental housing, where the cost of construction is very high and unaffordable for the target population. And they've also helped with the development of the mortgage market through issuing mortgage-backed securities and sukuks. In order to achieve an ambitious vision, we believe the key considerations for housing development organizations globally should include closer engagement with a wider set of stakeholders, including the public and private players, to help build the market as a whole across the value chain and achieve the government's goals. They should look to develop innovative housing and housing finance schemes to incentivize the private sector participation and monetize private land, especially in rural and suburban areas. And lastly, we think they should be adopting sustainable programs and sustainable initiatives, perhaps with income generating and revenue streams that enable them to ensure a sustainable business model. And like I said earlier, there's no one-size-fits-all model here. It really is a case of understanding what's going to work in your local markets. That's all I wanted to say. Thank you very much for listening, and I hope you enjoy the rest of the conference. Thank you very much.